Again, thanks everyone for joining us. This is session 4 out of 15 in the summer 2023 UL System Financial Wellness Series. I'm Brian Bolton. I'm a finance professor at UL Lafayette. I am also serving as the content expert on financial literacy for the UL system. We have 5 content experts: financial literacy, mental health, research and grants, online learning, and open access education. And 5 different individuals from, I guess, 4 different universities. We have 2 from Southeastern. And each of us is doing different sessions, series, providing different content resources for the system throughout the summer. And I'm doing, obviously, financial literacy stuff. Today's topic is one of my favorites out of the 15, because it talks about side hustle. I'll use the word entrepreneurship throughout. Many of us are entrepreneurs and we don't know it. Many of us have either informal side hustles or formal side hustles. That makes you an entrepreneur. And the more you can treat this side hustle, hobby, business, whatever it is, as a real, legitimate, structured business, the better off you're going to be. And the more options, the more flexibility you'll have. And also the more you'll reduce liability. We'll talk about that in some ways too. And so this is one of my favorite topics because many of us are dreamers and we like to think about what else we could be doing, not necessarily looking to leave what we're doing, but what more could we be doing? And entrepreneurship can play a big role in that. As I said, I'm Brian Bolton. My contact information, brian.bolton@louisiana.edu. I've also provided a website that I have posted through my campus website. And this is really just a repository or library of different documents that I keep for workshops like this or presentations like this. All of the materials from today will be posted in the UL system site as well. So you can access it there if you want to go back or see the slides or the handout that will be posted. But please, please, please feel free to reach out to me. I'm a finance guy, but I deal in a lot of entrepreneurship programs, doing an entrepreneurship for veterans this evening. And if I'm not a good enough resource for entrepreneurship, I've got friends on campus. And if you're looking to start a business or looking to manage your current business operations a little bit better, if I can't help you, someone else, I've got friends who can. So as I mentioned, this is session 4 of our 15-part series. This is the full list. We are there on the 20th. We got another one coming up this Friday where we look at kind of family financial planning. We've been through 3. We'll do another session on entrepreneurship and side hustle in a month, 5 weeks, on July 25th. We'll go more into detail on taxes, and we'll talk about taxes today. Taxes are a big part of every business, in good ways and less good ways. But it might be the first time you've ever heard taxes referred to as in good ways, and I'll explain that in a minute. But what we'll just do kind of more of the same, kind of dig deeper into maybe some financials in 5 weeks that we won't kind of go too deep into here. The focus of this summer series is just that, to focus. Rather than doing a long session on investing or a long session on budgeting, we're trying to focus on target markets and targeted topics that will connect with target audiences. Nobody alive should attend all 15, except me, I guess. But maybe, hopefully, some of you will see 3 or 4 that are relevant to you that you can tune in for, and if not learn anything, at least get some new perspective. Hopefully you learn, but certainly get some new perspective on managing your money and controlling your money. All these sessions will be at noon to 1, except for the 18th and 19th of July. Those will be at 3 to 4, just to mix it up. That's our series. Hope to see you again. Throughout this series, what I'm trying to do, is help you achieve happiness. Some people want satisfaction or fulfillment or purpose. That's fine, great. Whatever term you want. I focus on happiness. Happiness is all part of balancing our long-term and our short-term goals. It's also balancing family needs, financial needs versus wants, and all these different tensions. And as we go through these sessions, hopefully we're trying to get some perspective on how you can balance these a little bit better. And maybe there's some strategies that we share that help that happen. Use quotes a lot in these sessions. Takes as much energy to plan as does to wish. The most difficult thing is the decision to act. The rest is mere tenacity, and that probably applies best to entrepreneurs and side hustles. Is a lot of good ideas out there, a lot of good opportunities out there, but you got to make it happen. You got to step up and you've got to make it happen. And having that decision and starting your business or starting your business plan or registering with the state, whatever it takes, that first decision to act and to make it happen is frequently the hardest. And then it just is about how hard you work and how intelligently you work, that tenacity. The overall picture of what we're doing in financial planning, financial literacy, it all starts with values, dreams, and goals. What do you want to do? All of us are different. We have different goals, different values, different situations. And as those values, dreams, and goals are informed by our current situation, whatever financial plan, financial issues we want to address, those all come from values, dreams, and goals. I can't provide a set boilerplate best financial plan for everyone. The best financial plan for you is going to depend on your values, dreams, and goals and your current situation. 20-year-old single college student is going to be much different than a 40-year-old parent of 3 kids. And so creating that financial plan is going to be different for everyone. Personal finance is personal. And that certainly applies to entrepreneurship, side hustle as well. And so what we're kind of addressing today, not necessarily your career, but career adjacent business activities, that's going to impact both your family situation and your financial plan. And so we'll look at some tips, some ways that it impacts it and help you get you started. We try to be short and sweet in these. We'll start with list of 5 issues that you may need to know. You may be an entrepreneur without knowing it. And as I said at the beginning, many of us have side hustles or activities. You might think of yourself as an entrepreneur, building the next electric vehicle or spaceships to different planets. But you have a side hustle, you have income. If you're earning income from any other source than your job, where you have a W-2 and a W-4, you are an entrepreneur. And if you are an entrepreneur, thinking, acting, and reporting like an entrepreneur will probably make your life better. So any income you're getting outside of your job, you're an entrepreneur. I have students. I do sessions with musicians. And if you're a musician and you're getting paid $50 to sing or perform with the church choir, you're an entrepreneur. You don't think of yourself necessarily as one, but you are. And all it really means is that you have business income and business activities to manage on your own. And so when we think about that, managing your business activities on your own, taxes are going to be a big part of that. Being an entrepreneur brings both new opportunities and responsibilities related to taxes. It's not all bad news. We just need to do a little homework and make sure you know what you're doing. And I'll provide some guidance on both the opportunities and the responsibilities. The responsibilities are pretty simple. Anytime you have income, you owe taxes on that income. The opportunities are, as an entrepreneur, if you are also a business owner, you can manage your personal financial issues at the same time as you're managing your business issues and get some efficiencies or synergies, basically saving taxes by having the business entity. The IRS doesn't care what I do with my personal life. There's no benefit for what I do with my personal life. So if I buy a $20,000 car for myself, the IRS doesn't care. If I buy a $20,000 car for my business, now the IRS does care. And in that way, a $20,000 purchase could reduce my taxes significantly. And so that's an introduction to the opportunities, and we'll explore those a little bit more. Third is you're thinking about whether you have a side hustle or a hobby or whatever you think of it, or a full-fledged entrepreneurial entity, think about liability. Think about protecting yourself. Anytime you engage in business activities, whether you're selling lemonade or your children are selling lemonade, selling cookies, consulting, you engage, you become open to new types of liability. And in Louisiana, liability can be a big issue. Lawyers make a lot of money and very busy. And so doing a little bit of homework to make sure you're protecting yourself can probably save you a lot of headaches and potentially money in the long run. If all you're doing is passive consulting, no physical interaction, liability may be less of an issue. But if you're giving advice, maybe you want to protect yourself from someone thinking that your advice was misguided and caused them damages. So again, we'll look at some ways to protect yourself through that. Fourth, as an entrepreneur, your personal and your business lives are going to overlap in a lot of ways. Some ways you want to be intentional about separating them. So thinking about how you can separate those and benefit from the overlap is a big challenge for a lot of entrepreneurs. A lot of entrepreneurs start their business as a family operation or activity. If it goes from barbecuing in the backyard to food truck to the restaurant, at what point does the family stop being involved? Or how do you keep those business and personal lives separate? Again, there are good opportunities, but there's also maybe some downsides, perhaps obviously, to combining business and personal lives. And there's certainly some good reasons to separate them somewhat. And then finally, because being an entrepreneur will require so much of your time, so much of your energy, perhaps so much of other people's time and energy, communication. Communication is really, really important. When I get home from my day job, my family asks me, how was your job? How's your day? I say, fine. Maybe it's not great for the relationship, but that can be kind of the end of the conversation. As an entrepreneur, your day at the office doesn't stop when you get home, and it becomes a part of your family and other loved ones' lives too. And so, but either formally or informally, directly or indirectly. And so communication becomes really important. So when we think about, as I've talked about, your life as an entrepreneur will overlap into your personal financial lives. And knowing where to take advantage of the overlaps, such as tax planning, and where to create an intentional divide, such as relationships, can be critical to your success in both. And so just being intentional and thoughtful can help in both ways. So let's look at a few of these. In your personal life, you control what investments you make, what insurance you need, taxes, your relationships with family, or how you manage the family finances, and then any long-term estate planning issues. When it gets to a business, all of these are interconnected, and you have to make some either trade-offs or decisions about how to manage and go through these. So as we think about basic budgeting, debt management, financial management, how much of your savings is necessary to start the business? Do you have to put all of your savings? Do you have to cash out your 401k or your retirement plan? Are you going to be working at home using your home office as your business office, or your home computer, or your home personal car? Again, in some ways, as we'll talk about in taxes, using the home office, using the personal computer, using the personal car, those can reduce your tax obligations, your combined tax obligations. So those can be good things, but they can also be a burden, such as, if you have the home office next to your home bedroom, it may be very difficult to turn off the entrepreneurship or the business side. And so thinking about just the financial management of different resources, financial, other assets, how do you manage that as an entrepreneur? Can be challenging. When we think about investing in the business, how are you going to grow? How are you going to hire employees? And how are you going to go about hiring employees? At what point do you decide you need to hire an employee and give up some of your revenue or cash to pay those employees? As an entrepreneur, can you make any investments outside of the business? Or do you have to commit to everything being in the business? Can you succeed if you don't commit? What about a retirement account? If you leave your full-time job can you have your own retirement account? Can you have a retirement account through work? The answer is yes. But you have to do it. You have to do it individually. You have to get an individual retirement account of your own through broker or financial institution. Or if your business is large enough, you can have the business provide a retirement account for you and any other employees. And so, yeah, there are options. The options are not without costs or trade-off. But from an investment perspective, yes, there are lots of options. But now it's up to you to take ownership and take the lead rather than having your company provide that. With insurance, what insurance does your business need? And this is about liability, this is about protection, this is about the assets. You want to ensure that the business can succeed. So do you need additional insurance? For example, many small businesses have key person life insurance, where maybe the top 2 or 3 founders, owners, executives have unique insurance policies on them. And many businesses will do that, and that may be helpful or essential. But also, what liability do you personally have? And that question will be answered in part by the legal structure of the business. By default, all businesses are sole proprietorships. If you do not register, you do not actively choose any other structure. By default, all businesses are sole proprietorships. But if you're a sole proprietorship, you're exposed to maximum personal legal liability, meaning there's no separation between business liability and personal liability. So if your business makes a mistake, all of your personal assets are liable or subject to being taken over. Whereas we can choose legal structures such as a LLC, limited liability company, or a corporation that protects us, that keeps the business liability with the business and the personal liability at the end of the personal level. With respect to taxes, that also starts with the legal structure. The legal structure will influence our tax obligations. Simply, if you're a corporation, if your legal structure is a corporation, then the legal structure, the legal entity files its own taxes. Whereas if you're a partnership, sole proprietorship, limited liability company, the business will prepare taxes as legal entity, but it's a pass-through entity, and so the tax obligations and benefits flow through to you as an individual. So again, if you're using your home office for the business, you can get a tax deduction for that expense for the home office, but that's really just flowing through to your tax return as an individual through the business. The business is a tax-through entity. So we'll look at a couple of benefits in just a second. And then thinking about how business tax issues impact your family, your long-term personal goals. And a lot of that will flow through to how successful the business is and how you have the business structured. And finally, as we think about family and long-term success, we'll go into this family and certainly the estate planning next month in 5 weeks when we get to part 2. But thinking about business issues, if the business is successful, how do we manage that long-term? And how do we think about what happens to the business when you retire? That's the business side. And then the personal side, the relationship side, is what are the pros and cons of having the family involved? What are the pros and cons of those relationships, those overlapping relationships? And at what point do you separate those for the betterment of both the family and the business, perhaps? These are challenges we don't have in our daily personal lives as much, but by being an entrepreneur, having a side hustle, everything is overlapped, and there's gray areas. Again, these gray areas are both good and bad in some ways. And so we just want to be intentional and thoughtful about how we're navigating them. So all these, you're going to be connected in your business. You want to be thoughtful and intentional. So let's go back to the first 5 issues. You may be an entrepreneur, not know it. If you make any income through other means, you are an entrepreneur. You are a business. You have to report income as a business owner, even if you're just a pass-through sole proprietor. But any money you make that's not from an employer, any income that will not be on your W-2 makes you an entrepreneur, whether that's $50 from mowing lawns or singing in the church choir or building a business with hundreds and hundreds of patents, 1,000 employees. You're an entrepreneur. And again, I mentioned this, as I said 10 minutes ago, you're an entrepreneur because you want to think and act like an entrepreneur. You want to strategize, manage your money, manage your operations, but you also have to report like an entrepreneur. If you have these activities, then the IRS or the state or the permit office, depending on your type of business, they care, right? And they want to be involved and they want you to report to them. So if you have business activity, again, a side hustle that you sell $100 worth of cookies every year, right? It might seem like nothing, might seem like a hobby. You want to be careful to make sure that it really is just a hobby and not a real business from a reporting perspective. But once you take your hobby beyond just a fun activity and a pure side hustle, you want to at least think as professionally and strategic as possible, so you're not wasting your time and wasting your money. And if you got into the hobby because it was fun, you want to keep it fun. And the ways to kind of really the two issues you cannot avoid with any business activity are going to be taxes and legal liability. And so you want to plan ahead and be intentional so that those issues do not cause you undue stress or complications. So let's talk about each. So taxes. Any dollar of income, again, whether it's selling cookies, whether it's consulting, winning the lottery, whatever, the IRS might view it as taxable income. I say potentially because there are some exceptions. And when we say taxable income, at the business level, you get income, but then you also get to deduct all business expenses. So you might not have, even if you have income, you might have enough expenses so you don't have a net taxable income. But you have to report every penny of income to help the IRS understand what your taxable income should be. So in general, you can offset any income received from your side hustle with expenses related to that. If you make $500 from your side hustle and you have $700 of expenses, 500 of income, 700 of expenses, you do not have a $200 deduction, but your net is zero, right? You don't get to deduct or get a refund for business losses or side hustle losses. Business, if it is a legitimate business, you do. So when I say side hustle, I'm really thinking of just kind of pure hobby activity type stuff. But if you have whatever business expenses, and when I say business in this case, sorry for not being consistent, but if you have a hobby and you're painting as a hobby and you sell some paintings, but you have obviously lots of expenses for the painting, you could deduct those expenses. You sell $1,000 worth of paintings, you have $800 of expenses. Your taxable income is just the difference, the $200 difference. We can't do that for personal tax returns, right? My personal life expenses, the IRS doesn't care about that. They don't care about what I spent on dinner last night. They don't care about how much my car is. I don't get to deduct those things. There are very few personal expenses that we get to deduct. Education is one, home mortgage interest is another, but most of our personal life expenses are not deductible expenses. For businesses, they are. And there are going to be some gray areas, like using a home office or a home computer or a vehicle. In general, yes, if they are legitimate business expenses, then you can deduct them from your legitimate business income. And by deducting them, we reduce taxable income. So you do not have to move the assets into the name of the business to benefit from this. You don't have to have your house owned by the business. But it may help it may help some clarity with the IRS if the business purchases your vehicle or the computer. And by having the business purchase and own these different assets, the business can expense them, whereas we cannot at the individual level. And so that's good. If it is a legitimate business and you're trying to make a profit consistently, and it's not just a hobby or activity, this is a intentional focused business, you can at least carry forward losses. So you sell $25,000 worth of painting that cost you $30,000 in expenses, you have a $5,000 loss. You cannot necessarily take that $5,000 to offset salary or other paycheck income, but you can take that $5,000 loss to offset future income. And again, we can do that with business income and expenses. We can't do that with personal expenses. And so opportunities and responsibilities. When we think about taxes, there are, yes, responsibilities. You have to report any business income you have. My students hate hearing, my finance students hate hearing that every bet they make, on some online sports betting site is taxable income if they win. If you lose, it's just a hobby loss and you can offset gains, but they don't like knowing that their gambling gains are taxable. It's the rule with everything. Any income we make is taxable because the IRS views the macro infrastructure of the USA as having helped contribute to those income gains. And that's our responsibility, but the opportunity is we can reduce income by business expenses in ways that we cannot do it for personal. So those are both responsibilities and opportunities. From a legal and business entity perspective, if you are selling cookies out of your house, I come over to your house to pick up a dozen chocolate chip cookies, and I slip and fall. I can now sue you, right? It's a business transaction. I can sue. I came over for a dinner party, I could too, but now I can, because it's a business transaction, I can sue you individually, or I can sue the business. If I don't come to your house, if I go to your cookie store, your food cart, and I slip and fall on your premises, I can sue the business. What you probably don't want me to be able to do is sue the business and you as an individual. So as by default, all entrepreneurs are considered sole proprietors until or unless you actively, proactively choose to be some other form of entity. And so as a sole proprietor, you, the individual, are liable for all business issues. I come to your restaurant, I slip and fall, I can sue you and take your house. What you want to create, if you've got a serious legitimate business where liability might be an issue, you want to be proactive, and you want to form either a limited liability company, an LLC. There are 2 or 3 different types of LLCs, a corporation, or a limited partnership, and there are other entities as well, that separates business and personal liability. If I sue your business for whatever business dealings or mistakes I might see, you don't want me to take your house, your car, personal stuff, retirement plans, whatever else you might have that I want. In order to set up an LLC, it costs $100 and a few hours of time, registering with the state. You probably don't need to hire a lawyer initially. There are plenty of advisors and consultants out there that can help get you going. Corey Jack at Jack and Associates he's in Lafayette, and he's a friend, and I like to think of him as a friend. He's our local connection, but there's plenty of people wherever you are that can help you. Again, a few $100s and a few hours, a couple $100. It's probably money that's well spent to help you figure out if you need to spend the money to protect yourself from legal liability, and then two, kind of how to do it, what you need to do. If you're a consultant and you don't see a lot of serious legal liability, then maybe being a sole proprietor is okay. In all the entrepreneurship work we do, almost everyone can benefit from liability protection. And sometimes the biggest benefit is just peace of mind, knowing that some overzealous customer or stakeholder isn't going to come after your house or your personal assets. A few hours and a few $100 save you a lot of headache. What about separating personal and business lives? In some ways, you need to keep them separate. Creating the LLC or the corporation creates that legal separation, even if there's a lot of shared resources. For me, I'm a finance guy. I want my financial life completely separate from my business excuse me. or business financial life. Part of that is for just reporting and clarity and tracking. Part of it's for telling the story to investors or to the bank, or anyone else that might be interested in my business story. I don't want to, if I'm applying for $1,000 business loan, I want to be able to tell the story of the business and how the business is going to repay that, and not be fumbling around with my own personal checking account to convince anyone. So separating those lives starts with getting a savings account, getting credit cards, debt checking, credit scores. Credit scores are interesting because initially the credit score of the business might be directly tied to your own personal credit score. Some institutions, banks will not give you a business account if you have a terrible personal credit score. In that case, you can get a cosigner, or you can shop around because someone might. There might be financial institutions. There are financial institutions that don't have such a direct link, even if initially it looks like there's that direct link. But over time, your business will generate its own credit history and credit score. You may need a unique team for the business, lawyers and accountants. You don't necessarily need for your day-to-day life. You don't need to have them on retainer. You certainly don't need to have them on staff or on payroll. But just identifying a lawyer that you're comfortable asking stupid questions to, or accountants that you're comfortable asking questions to. These individuals, they see hundreds or thousands of businesses. They know industry, they know what you need to do, whereas you only see one, and they can give you great perspective, but you don't want to overpay, obviously. So you don't need them on retainer, you don't need them on your team yet, but just make sure you know who you can contact. In some ways, there may be benefit by having lots of overlap, not creating the separate. Again, as we talked about the tax benefits, by having the business own some assets that you use personally. That can be a big benefit. I'll give you another example of this. You have a vehicle that's owned by the business, but you use it for personal purposes, take the kids to school, whatever. In theory, you are supposed to report. You're supposed to separate. So, okay, I drove 10,000 miles this year, 7,000 were personal, 3,000 were business. That's 70% business expense, 30% personal. Or did I did that backward? 30% personal, 30% business, 70% personal, sorry. But what if you get a flat tire? What if you get a flat tire driving your kids to school? Is that a business expense or is that a personal expense? Flat tire driving the kids to school. It's a business expense because the business has to repair that tire to do any business activities. And so even though you're supposed to explicitly separate, there's some places where you can't. And those benefits result in reducing your taxes. And then also the overlap, you can benefit from working with family members over time. Maybe you want to separate, as we'll talk about in the next slide, but there can be significant benefits. And so communicating. So that family, the communication we talked about earlier, you probably aware that financial infidelity or financial issues are the #1 cause of divorce in the US. Your partner may be your soulmate, but that doesn't mean you share the same financial values. And as far as risk taking, managing assets, managing investments, you want to be careful that whether it's not even infidelity, but financial disagreement or discord doesn't overflow and cause relationship problems that don't need to be created. And your family members obviously can be your best advisors. They know you better. They can call you out on when you're offline. They know what your strengths and weaknesses are. All business leaders need this feedback, and they're probably going to give it to you for free. They're probably going to give you the feedback whether you want it or not. And so use them, listen to them, but also be careful about how actively involved the family becomes. If the family is actively involved, make sure roles and responsibilities are clearly defined. Ad hoc expectations rarely work in business. They rarely work in personal relationships. Initially, as a side hustle, as a hobby, maybe you don't need a lot of structure and formality, but over time, when your partner goes from spending 5 hours a week to 15 hours a week on your side hustle or hobby, that may be a problem. And then as the business grows, bigger commitment, Are they okay with you working 100 hours a week? Are they okay with you using your family retirement portfolio or you're getting a second mortgage on the house to fund the business? At what point do the partner children own the business? Can the children take over the business? Long term, this communication is key to make sure everyone's on the same page. We don't think of communication as a business, obviously is kind of an internal entrepreneurship activity, but it can be critical. And so here are 5 things you can do tomorrow, and then we'll conclude with this. So you're an entrepreneur, you think of yourself as an entrepreneur, maybe you're questioning whether you're an entrepreneur. What are 5 things that you can do tomorrow to take greater ownership of your entrepreneurship? Build your team. Start thinking about who your team is. I talked about this. Family can be your team. You can have a lawyer. You can have a tax accountant on retainer. You may need some other advisors, just general business advisors, people you can go to that are going to, whether it's just good friends that'll call you out on, when you're fooling yourself or not giving yourself enough credit. Build your team. Think about who can help you. The entrepreneur who tries to do everything on their own is generally not a successful entrepreneur. So think about your team, both the formal and the informal team. Separate your personal and business lives as much as possible. Starts with a bank account. Eventually you'll establish credit, so that can take time. But just by getting separate bank accounts, and again, not every bank is going to do that easily for you. And most banks will require articles of incorporation, which I'll get to in a couple more points. But get that separation. Either both start thinking about separate activities and then acting with separate activities. Once you have income, once you have expenses, find an accounting system you like. Quicken, QuickBooks, TaxBot, there's dozens or hundreds out there. You need to track everything. You want to track all of your expenses. You want to track all of your income. You want to track all of your financial transactions, both to help you be a better manager of the business, to help you understand strengths and weaknesses of the business, but also for external reporting. The IRS, if you track every penny that you spend or you earn, it's going to make your relationships with the IRS much better. And if you ever want to go get a bank loan or you want to have investors, being able to quickly and easily show them what the business has done, make their life a lot easier and make your chance of success much greater. You don't want to you'll be fumbling through an old shoebox of receipts and invoices when you go to raise $10,000 from an investor. Quicken, QuickBooks, all these, the reports, they will create hundreds of reports, more reports than you could ever use. The learning curve to become proficient with them is pretty short. You can become proficient pretty quickly. Most humans will never become expert because there's just so much that they can do. But no, most humans don't need to be expert. Just find a system you like, learn it, live it, love it. Track every penny that you make or that you spend. Perhaps this should have been, registering your business should have been point number 2. But as soon as you have a business that an activity that you think is a business, just consistent revenue, even if it's still a hobby, even if it's still a side hustle, once it becomes consistent and regular activity, register with the state. Depending on the type of business you establish, it could be anywhere from $50 to $200 or $300. Take a couple hours to do. In Louisiana, gobiz.com, GEAUXBIZ, is the resource for registering with the Secretary of State. I've been in other states. What our platform is one of the best that I've seen, just as far as giving us our dashboard and reporting back to us and allowing us to kind of manage and just understand the clarity. Other states are far more cumbersome. So take a little bit of time, register with the state, and have your legal business entity. First step to securing your business name. If you don't register and you choose a name that someone else is using, now you've got some liability issues potentially. But once you have that name, you own it, you control it, you can build the brand and protect the business as you want to grow. And finally, begin thinking about a business plan. In colleges, we teach business plans as kind of these long, big, thorough documents. You can certainly do that, or you can be much more brief. Think of the business plan as telling the narrative of your story. Think of it as your roadmap or to-do list, both for strategy and decision-making. Banks will want to see it. Investors will want to see it. I don't need to say investors twice. But any external stakeholders will want to see it and think about it. If a business plan is overwhelming, prepare a business model canvas. Business model canvas is the abridged version of the business plan. If you've never heard of business model canvas, here is an example of a business model canvas. There are dozens out there, hundreds out there. And basically, it's kind of a one-page poster or sheet of the critical elements of your business. Business venture, describe the business, what's the mission, what's the vision, go into markets and both the customers who are going to pay you, the customers who don't want you to succeed, the macro environment that your business is in. On the right, operations and implementation, how do you make it happen? Down below, cost structure, what are our expenses, what are we paying out, what revenues, what money is coming in. And in the middle of this one, I like this one because it has value proposition in the middle. If you had 30 words to tell me what's going to make your business successful, put it there. Value proposition is what makes your business unique and kind of what ties everything else all together. And if you're in an elevator with a bank lender, you have 30 seconds. What's your story? What do you say to convince them to give you money? Again, there's dozens of models of business model canvases out there. This is the one I chose to present. Most look similar. They'll be slightly different, just depending on what you're trying to do. And for me, this is step one for any entrepreneur as you kind of begin thinking, because this starts to feed into strategy. If you do this and you can't identify customers, that's a problem. And so maybe you don't have a business idea, or maybe you need to kind of rethink and refine it. But this is step one. Go through this, begin thinking about what your business is going to be. Trying to create some happiness in entrepreneurship, side hustle, hobbies. They can be fulfilling in many ways and kind of become, once you go from kind of short-term to long-term, you want to kind of manage both the benefits and the responsibilities of that. Having a business, taking a hobby from a side hustle to a business can be great, but there's also responsibilities. This is one of my favorite slides, not necessarily for this topic, but for every financial planning topic. We all start by setting our goals, then look at the environment, look at reality. Then we create a plan, whether it's a business plan or business model canvas or just a financial plan. We try to execute, track some progress, adjust the plan based on that progress. This is true whether family finances, it's true for business finances, entrepreneurship, it's true for all finance. That's it for today. We've got the first 4 done. On Friday, we'll be back here same time, different channel. All of these sessions have different registration links. But a Friday at noon, we'll be talking about family financial planning, making finances work for the whole family. All of these resources, the slide deck, a one-page handout, and the video are all posted on the ULS system. That's the story. This is it's the end. I'm going to stop sharing. I'm going to stop recording.